short sale or deed in lieu. So loan modification, this is where you're changing the loan terms. Again, we're looking at these in order. We've asked our servicers to think about our AMPD or at M, loan modification. We might be extending the loan term up, maybe going from 30-year to 40-year to help get that payment more affordable. We might be changing the loan type from an ARM to a fixed rate loan. We may be capitalizing those delinquent principal and interest payments, repassing the loan, throwing them in on the back end. We can also be doing a temporary or permanent interest rate reduction on a modification. Again, when modifications are done now, this is when Fannie Mae and the MI companies need to be notified. It might be required that you need to record the modification, and we pay our servicers $700 to do loan modifications. Benefits, again, non-performing loan begins to perform, saves the foreclosure expense. The change for the borrower, the change in the loan terms might then again make that home affordable for them, where they avoid foreclosure and stay in the home.
Are there fees the borrower needs to pay for any of the first three options?
No. Yeah, the question was, is there a fee that the borrower would pay for any of the first three options? No, there are not. All right, options for borrowers who cannot afford their homes. And these are the two that, we talked about the first three, keep them in their homes. These are going to be their options that don't keep them in their homes, but again, allow them to avoid foreclosure. That's your short sale, and that's your deed in lieu. So a short sale or pre-foreclosure, typically you have a property that is sold for less than owed on the loan, and we accept this short payoff. We do require a property appraisal because we want to make sure what that value is before we just say, all right, debt forgiven. Subordinate lien holder must agree, so if there's a second out there, they also need to agree for the short sale because obviously the first mortgage gets paid off first. The second mortgage, those guys are at the greatest exposure because they're next in line. Requires Fannie Mae approval. We also do offer relocation expenses for borrowers from $2,500 up to $5,000 depending on that particular case to help them move out of the home to new housing.
Would that be a reduction?
No, and the reason we do the relocation expense is to get the property faster. Okay. The longer that person stays in the home, the more chance of damage to the home, the more we just want to get that property as soon as we can, so we provide those. That's outside of the short sale fees. And our incentive fee for our servicers is $1,000 up to $1,500 depending on the particular case to do the short sale.
Question back here, that's okay, no, I think I am. Okay. Everybody asks.
How does the homeowner apply for the relocation?
It's all through the servicer. As that servicer, that loss mitigation expert as a servicer, as they're working through the case and understanding the particulars, that's all part of the discussion. Because obviously there's going to be a lag time on the short sale, so there's plenty of time to make those sort of arrangements. All right.
John, on a short sale, the person who's moving the home, or the person selling the home, they generally agree to any price.
Typically, or they...
So not the lender that owns the property. They're the ones that make the decision. Are they going to accept it?
That's where we say Fannie Mae approval as well. And you got to think about it in a couple ways. One, if it went through desktop underwriter, we approved it, all the conditions were met the way we asked for them, it's all on us. Okay? If something was lagging, maybe there's a little bit of fibbing on the income, the appraisal wasn't right, then it's going to fall back on the lender. Who's going to be required to make that loan whole.
So, but if a lender is going to be stuck $22,000, then you're going to give it back to the lender.
The piece of the short sale? We're going to satisfy that as much of that mortgage as possible, and then that's forgiven, and that actually goes back to the borrower in terms of, that actually turns into taxable income. So you have a borrower that takes a short sale and we say, okay, well, we just wrote off $20,000. That $20,000 is income to the borrower.
Is my approval required?
My approval is definitely required. There's a question.
Okay,
I want to ask a question about the relocation assistance.
Okay.
Can the lender say, okay, I'm going to have a short sale, but I'm not going to relocate?
That's all going to be, the lender is going to be in touch because this requires Fannie Mae approval. They're going to be in touch with us and letting us know the situation, so there's going to be somebody from Fannie Mae involved.
Okay, so every short sale that's a
Anything that needs Fannie Mae approval or MI company approval, they are talking to us. The lender can, you know, it's not the lender's money for the relocation expenses, so there's really no reason. We're paying them up to $1,500 to help us do this. So they're making money, you know, by providing this service, and then the money for relocation expenses we're paying for. It's not coming out of their costs. So there should be no reason.
So,
And then again, we're talking Fannie Mae.
yeah, for Fannie Mae, because
Yes.
I have a client in that situation. So you also look at their hardship package to make sure it's the way it's supposed to be, not that they tweaked it or they lied or
Correct,
things like
correct.
that.
We're going to look at the data, verify the data, make sure. Yes.
How about that Debt Forgiveness Act that was passed?
You just talked about taxes.
Yeah,
Being
yeah,
taxed,
it goes
you're
tax.
told that you're not going to be taxed
Yeah,
by IRS, that they can't chase you for 1099.
that's the mortgage
It
debt
just
forgiveness
came out in
passed.
December.
But, okay, that's federal, but then there's still a state issue too.
Oh, that's
Oh,
So the federal says you can't do it, but the state says yes, we are.
Yeah. That's two different levels of that.
CYA, right?
Yes.
Yeah.
All right, so the benefits of the foreclosure sale for Fannie Mae, again, it saves our foreclosure expenses. We don't have to try marketing the properties, and we may receive a higher sales price than, also for the servicer, it saves foreclosure expenses. They earn a workout fee for that. For the borrower, there's no foreclosure showing on the credit report, and the improved cash flow, it could be there for the borrower, because they're no longer making that expense payment that they can't afford.
Foreclosure on the credit report.
Correct.
Okay, this is what I was understanding. If the lender, the servicer, allows the entire amount to go through, okay, it says we forgive you the whole thing, but if they say, okay, you still owe us $20,000, then that can go on your credit report as a liability.
As a
Right,
deficiency.
as a foreclosure, correct?
Well, again, that depends.
Okay.
Okay, in some of those cases, then that's obviously, it's not a full deed in lieu. That's an actual foreclosure. And, you know, you didn't work it out with us, you just went to foreclosure, you're done, here's your deficiency. You work with us, that's the short sale.
Okay, so there should be something written into the contract,
Yeah.
right? We gotta make sure that they're.
You gotta make sure this,
verbiage is
if it's a
in the
foreclosure, you will see that deficiency still hang out there.
Okay.
If you do a workout, that's why it's a workout, you're working it out, and that's when you're not seeing that foreclosure shown on the credit report.
Does Fannie forgive the deficiency or require a promissory note for the deficiency?
We do not require promissory notes of deficiency. We're not. In terms of foreclosure, all different game, but if we're working together, doing these workout options, it's deed in lieu, this is the last step before foreclosure. Now you have a borrower that voluntary, like our customer we're talking about in Mississippi. A borrower voluntary relinquishes the property deed to Fannie Mae in the MI company to satisfy the debt and to avoid foreclosure. Property must have been listed for sale at least 3 months with no reasonable offers. And again, we require appraisals on these, or BPL, so we know, typically what the value we're looking at. Of course, you do need Fannie Mae and MI approval to do these. The relocation incentive is still there for those borrowers, $2,500 up to $5,000. An incentive fee to the servicer for these is $1,000.